in the register of checking, and Mr. Davis is going to be today the moderator for this session. Without further ado, I'd like to hand the microphone to Mr. Davis. Mr. Davis, please go ahead.
Thank you. Thank you so much, Mr. Allah. And I welcome everyone to the second FAIR virtual workshop on agriculture, insurance and reinsurance, success stories in fair land. There, of course, are so many success stories, and we are very thankful to FAIR for having organized this today. Let me begin by introducing our illustrious speakers. We have first a lady who needs no introduction really, who's such a well-known figure and stands alone in her accomplishments. It is Ms. Farzana Chaudhary. She is a chartered insurance and MD and CEO of the Green Delta Insurance Company, and is the youngest female CEO in the industry, and is recognized by UN Global Compact as the local SDG pioneer in 2016 for women's economic security and her initiatives through Nivedita, a comprehensive insurance scheme for women. Among her many accolades, the prestigious Public Trust Award from CII UK for building public trust in financial services and insurance, and the Women Leader of the Year in the Asian Insurance Industry Award 2019, Honorable Mention for Excellence in Sustainability 2020 by the World Economic Forum are mentionable ones. See, as is fairly evident, she's done pioneering work in her field. She has materialized the concept of insurance for everyone through their product and services. She's been the driving force behind the launching of many innovative insurance products in the market, such as micro-insurance, digital insurance, weather-based, index-based agriculture insurance, which are contributing greatly towards the development of the overall sector. Under her charismatic leadership, Green Delta Insurance has launched a digital insurance ecosystem through Insumama app, which is the first general insurance comprehensive app in Bangladesh. With the dream of establishing universal health coverage, she played a visionary role in establishing the fourth subsidiary GD Assist Limited, which provides value-added services in the healthcare sectors by means of setting doctor appointments in the best of hospitals, logistics supports, global emergency and medical evacuation, visa assistance, and many more to transform the risk into an opportunity. Thanks today for being with us on this panel, ma'am. And obviously in Bangladesh, which is so exposed to the vagaries of weather, agriculture insurance becomes a challenge. Now, within that challenge, to carve out success stories is something that only a person of your stature could have done. Please, would you talk to all our viewers today and tell them about a few of the success stories that you have managed so well? Thank you.
Thank you, Mr. Devesh. It's an honor always for me to be here, and I thank FAIR for inviting me to talk about our success stories in Bangladesh. So can I have my slides? Yeah, first I would just like to go through a little bit of the global perspective and also what's happening in Bangladesh. Next slide. Next. Next slide. Can you show the slideshow? Yeah. If you see the economic impact of global climate change, it's obvious that 90% of the disasters are now classed as weather and climate related, costing the world economy $520 billion USD each year, while 26 million people are pushed into poverty as a result. And this graph shows that the current rate of average real GDP loss is showcased above, which shows how not only the number of the amount is increasing, but also the rate of increase comparatively is high. And Nigeria, Egypt, Bangladesh, Venezuela are the next most climate vulnerable nations identified in the analysis. Next slide, please. Next. This is just like the successful global cases of index-based insurance in few countries in Asia and Africa. We have India, Kenya, Rwanda, Tanzania, Ethiopia, Senegal, Mongolia, Kenya, where India was the first country to introduce the concept of agriculture insurance in 1999. And to cope up with the economic losses caused by the climate-induced risk, index-based insurance was the only suitable key that could mitigate the miseries of marginalized population of LDC countries like Bangladesh. And you can see the other countries. Next slide, please. We have seen that technology has actually revolutionized the whole economy's perspective in terms of climate change. And if you see the technological innovation in agriculture insurance, you can see revenue insurance, insurance of forestry, plantation and aquaculture, greenhouse, agriculture insurance through digital platforms, then weather-based index insurance, ill-based automatic enrollment and claim process, livestock, and multi-peril and multi-crop based insurance. I would just like to highlight when Bangladesh, a few years ago, I've also taken initiative in terms of, from the private sector like us and also the government sector, the Southern Bhima Corporation, and we're into agriculture insurance through digital platforms, weather-based index, livestock, multi-peril, multi-crop, yield-based and automated enrollment. Next slide, please. Next slide. Next slide. Sorry for this. Can I go to the next slide? I think I'm having some technical difficulties or what? Yep. If we see the current state of the agriculture sector in Bangladesh, you can see that the contribution of agriculture in GDP is 12.65%. People employed in agriculture 37.75%, and rural and agri credit through Bangladesh Bank through the private sector and public sector banks to the farmers were 9.93 billion USD. The farm household is at 63.11%. Households owned by livestock, that's 83.9%, and contribution in GDP by livestock is 2.9%, and 1.7% contribution in GDP is by agro-food processing industry. And of course, 1028 million USD export earning by 2021. And if we see the impact of the climate change on agriculture output, Bangladesh is the ranks third among the countries most hit by the disaster, 7th in the climate vulnerability. And then Bangladesh net loss is more than 10 billion economic losses from 2000 to 2013, whereas the available fund was only 2 billion. Uncertainty in weather changes in past 40 years was equivalent to 12 billion which USD, which constitutes 0.5 to 1% of our national GDP on an average yearly. Climate change will reduce overall rice production on an average of 7.4% every year over the period of 2005 to 2015. And heavy floods in 1987 to 2007 caused Bangladesh an economic loss of 8.4 billion USD and Cyclone Sidr in 2007 and Ayla. A GDP, it is estimated that OECD referred to a study that estimated GDP decrease in the range of 28% to 57% from 1 meter sea level rise. Next slide. We know that the agricultural contribution in the economy, and the country is losing agricultural land, approximately 80,000 hectares annually. Then rise in the sea level, and major crop failure due to unexpected variation in weather-like changes in rainfall pattern, drought, flood, and these are the major risks. So the production, the rice production in Bangladesh could be declined by 8%. And wheat by 32%, the food security, and that's why weather index-based crop insurance is an attractive approach to managing weather and climate risk, because it uses a weather index such as excessive rainfall, flood, flash flood, heavy fog, cyclone, and storm to determine payouts, and these can be made more quickly and with less argument than typical for conventional crop insurance. Next slide. This is just a history that how the agriculture insurance started. Next slide. Next slide. Just wanted to show that the agriculture insurance, the initiative started from Chaudhary Corporation from 1981. And then the project was a failure with which was initiated by World Bank, and then there was a lot of initiatives by PKSF, Oxfam, and other microfinance institutions. But that also, all the initiatives also didn't go much further because of the lack of technology. Can I see the slide, please? And from 2014 onwards, the first initiative was taken by Green Delta Insurance and also Chaudhary Corporation. And now there are other institutions who are trying to work on the agriculture crop index and also livestock insurance program. But we are having also assistance from Finance Ministry. The Finance Ministry has taken insurance product for flood index for the Haur areas in Bangladesh. Can I see the slide? Can't see the slide. I'm extremely sorry for that. I think I can just, I can't see the slide, but I can just talk about the Green Delta's perspective, that the ecosystem of our product includes multiple stakeholder whose designated roles to make this initiative work. Besides the insurance companies who will provide insurance services, financial institutions like MFIs, NGOs, and banks can link the farmers with the insurance companies through various credit facilities. The agribusiness like retailers, seed companies, input farms, contact farming companies, etc., also work as linking agents and distribution partners. I can't see the slide. Okay, so our model includes various multi-stakeholder approach and distribution partners, number one. And number two is the tech-based companies that we are partnered with play a role to provide technology-based value-added services. Different supports farms provides weather data and other data-related services. Government and regulatory agencies maintains rule and regulations and financial regulations, and reinsurance companies provide reinsurance support to the insurance companies. And the business model in broad sense works through a bunch of distribution channel who links a bunch of farmers to Green Delta. And we then issue policies for the farmers through distribution channels. And if there's any claim in the amount is also paid to the farmers through the distribution channel. So in the back end, the reinsurer gives the risk sharing support to Green Delta. Next slide, please. The core competency regarding our agriculture insurance success is actually is the use of advanced technology, which I mentioned that technology has created a huge revolutionary change in the agricultural sector, in agriculture insurance sector arena. That's how we have taken the bold step, and that has given us transparency and also efficiency. Multi-stakeholder approach I've mentioned, and the use of technology we have mentioned in the livestock insurance coupled with NFC tag. In addition to in case of the weather index based insurance, there is a provision of weather station in every 10 miles radius of selected areas, and we use satellite data. And we have a partner who gives us support services. And we also take it a point that to reach out to encourage the female farmers in order to bring them under the umbrella of financial security. So that's also part of the SDG area, that one of our corporate strategies to focus on the SDG goals. And in terms of agriculture insurance, we touch upon SDG 1, no poverty, SDG 2, zero hunger, SDG 9, industry, innovation and infrastructure, SDG 10, partnership and partnership for the goals. And there is a research and development wing of Green Delta that is actually helping us step by step, that we do a lot of research in terms of the product, pricing, and also the distribution channels. So end-to-end process help. That's the R&D. They help us in developing the product and process, and also how to encourage farmers and engage them into this agriculture insurance sector, so that educating them as well, instead of in addition to also providing them services. Next slide, please. As you can see, these are the multiple stakeholders I've mentioned, that we started with 2 partners in 2016. Then in the year 2020, we have partnered with 11 stakeholders, and now we have 20 partners. Actually, you can see that we have input farm, seed companies, contact farming, financial institutions like banks, MFIs, NGOs, and farmers hubs. So this is how we are actually going through these partners and reaching out to the farmers in the marginal segments and remote areas of Bangladesh. Next slide, please. Next slide. So as we said, that one of our core competencies, like we use the satellite data, and our product is very much flexible, and it's for any season and any crop across Bangladesh. So we started our operation with a pilot project with IFC in 2015, and that's how we started. And we till now we have impacted more than 675,000 lives. Beneficiaries touched 183,735 farmers. We tapped into 21 districts of Bangladesh and in 8 divisions, and covered 10 crops, including cash crops. Insured in 8 index-based perils. Claim payment were given to more than 34,000 farmers. Covered flood in 4 districts of 3 divisions, and we addressed 4 SDGs by agriculture insurance, which I mentioned earlier. Next slide, please. As you can see that Bangladesh, the flood index, Green Delta is the first insurance company who took the bold initiative as a private entity to work on the satellite-based flood index insurance in Bangladesh. And with the help of Finance Ministry, we are doing it in one area, and Southern Bima Corporation has given in another project in another area. And the challenges faced was in accessing the high quality data needed to fully understand the risk from flooding events to verify the claims. But a partnership with the Sri Lankan-based International Water Management Institute led to the development of a flood insurance product based on newly available high-resolution satellite data, following the successful trials in 2019 and 2020. And in this In this initiative, our local partners are Oxfam Bangladesh, SKS Foundation, Social Welfare Foundation, Manav Mukti Shongstha, National Development Programs, and under this product, we have reached out more than 4,524 farmers, and total land covered to 292,042 acres. Next slide, please. These are the showstoppers that has always given us a challenge. That is the insufficient literacy of the farmers. As we said, that the awareness of insurance is very poor, and the agriculture insurance is also very much, I would say, non-existent in the mindset of the people of Bangladesh, and let alone the farmers. So the knowledge and literacy level is also important to actually understand how an insurance policy can help their crops. And now the second thing is the unaffordability of the farmers to pay the premium. As you know, that agriculture insurance is quite risky, and this is totally reinsured, and the price is high. So in this area, we need assistance from the government. So I think the process has been started. The finance minister has started in joining hands with us, and soon I would say agriculture ministry and other ministry, they will be coming forward, and we need the interministerial linkage, interministerial combined approach to actually help come up with a very successful product and affordable product for the farmers. And another thing is mostly the women members of the families are enrolled when beneficiaries of our partner organization. And in most cases, there was a gap between the knowledge provided and the women communicated to their male counterparts. And consequently, in some cases, women have failed to convince their spouses. So that is one of the issues that we are facing. And the other is lack of government intervention and regulatory guidelines. As I said, that there is a lack of awareness in our country. So step by step, the regulatory body, the IDRA, has come forward to help us, and we need more support from our regulatory body regarding proper regulatory infrastructure and proper guidelines for the agriculture insurance. Next slide, please. Next slide. Well, what are the solutions to increase the inclusiveness? What we have thought about is how to replicate the inclusive business model for agriculture insurance to other insurers. So we're working in such a way so that we talk about our success stories, and of course learn from your failures, and then do tweaking to our products so that it is helpful for us, and also encourages other insurers to join. That is to use the inclusive model to enroll 20 to 30% of shared crop alongside their regular beneficiaries. So we're currently excluded from the benefiting from the risk transfer mechanism through a third-party certification of the area and type of the crop cultivated. To overcome the challenges of increasing additional cost and human resource requirements for community mobilization and awareness creation, trainings and sessions can be held with the help of local partners to develop the skill and knowledge based on the field officers, staff, and people who have better and direct connection with the end beneficiaries. And the introduction of digital innovations supported by the government, such as the use of satellite technology for damage assessment and application of mobile cash transfers for premium payment and claim distribution, would reduce the insurance distribution and transaction costs, resulting in a reduced premium. The use of a bank transfer system is not recommended since most of the farmers do not have a bank account. And accessing the bank account could not lead to significant transaction cost, would lead to significant transaction costs for farmers. And the government also has the opportunity to bundle the agriculture and disaster relief subsidies with the insurance to reduce the cost of the premium. And another option is to bundle the insurance with ongoing microfinance that would provide a portion of the loans to finance the premium. So that is actually, these are the opportunities that we have to work with the microfinance institutions. And organizing separate and dedicated awareness programs to educate male farmers about the index insurance is an additional cost to the NGOs, and mobilizing these farmers to participate in daytime meetings has an opportunity cost due to the loss of labor time. So there can be sessions for the male farmers in the evening, and also we can produce small video clips and YouTube videos so that they can learn from there. Next slide, please. Next. Okay. As we have mentioned that there are like IDRA is our main regulator of insurance. We are working on that, and there should be IDRA needs to enforce corporate level agreement among potential facilitators like companies related to the agri value chain, telco and banks, and etc. And now IDRA and Bangladesh Bank are jointly working to establishment of the bank assurance model. That will really help us in the insurance market, and also it will be very effective to increase the penetration through bundled products with the bank loans, which we have also started as a pilot with Bragg Bank in our livestock product. And there is a need of amendment in the microfinance rule, the MRA guidelines, and the coordination with IDRA to establish partnerships among NGOs, MFI, and the insurance, because the MFIs are selling insurance, but not through the insurance providers, but through themselves. So there is a need to actually amend the policy guidelines among the MRA and IDRA. And as I mentioned, that an interministerial holistic approach is required among the ministries like planning ministry, ICT, finance, disaster management, and agriculture. Next slide, please. These are some of the testimony from the donors and partners. They have supported us, and actually they have acknowledged Green Delta's contribution from Syngenta Foundation, and as you can see that where they have mentioned us that working with us, that has actually helped the farmers as well. And recently Green Delta Insurance has insured 60,000 farmers in North Bengal under the weather index based insurance for the Amon season with the help of Syngenta Foundation and under its Shurakha project. And to date, 83,522 farmers have been reached under this project, and expanding its coverage to 2,913 acres of land. Next is from a woman farmer, Nilima Sinha, that's who is a tomato farmer of Bagherhat, which is in a very remote area. And there we can find most of the farmers are actually women. The income from the tomato garden supports important things, which is mentioned that it helps her family and the education of her daughters. And although she said that they have to buy the insurance, I feel that is very important thing that she feels that the insurance has to be bought. So she still pay for the premium and she feels that it supports them. And what she mentions that because it gives her the confidence before harvest, and she can rely on it to pay for the important things. So this is something that quite a success story for us, to have the women entrepreneur, women farmers talking about this. And we have also talked about to the planning minister and also the finance minister to actually give them a space where they can pay less premium and they can waive tax and VAT for poor farmers. Next slide, please, which is the last slide. During COVID, as I've mentioned, that COVID has actually taught us how to work differently, and technology has taken the whole, changed the whole scenario. And we have actually helped through a mobile financial service, one of our service partners, and we have helped 1,500 farmers in remote areas of Bangladesh during COVID in 2020. And not only that, so that they can at least to help them to survive when they couldn't operate for a few months during lockdown period. And not only that, during last Eid al-Azha time, we helped few farmers to sell their cows through an app. And we had an end-to-end process where we have delivered their cows in Dhaka city to the customers, and not also through that, to also the slaughterhouses. So there were a multi-stakeholder approach that we have taken, and this was a very successful project for us, and we hope to do to help 100 farmers, 100 farmers who has livestock and cows that they can sell through these technology partners and also insurance partners. So this was my last slide, that how Green Delta is marching with the help of technology and coming up with innovative products and services through help of the technology and technology partners. Thank you very much for your patient hearing.
Thank you. Thank you so much, ma'am. That was really very illustrative. And when you have a tomato farmer who has the entrepreneurial skills and takes up insurance to cover the crop, it speaks volumes of the penetration that Green Delta has actually reached. So great going. Thanks so much, ma'am. Thanks for that. We will now invite Dr. Bhagyo Sakware, who is the Executive Chairperson of the Africa College of Insurance and Social Protection, Tanzania. Dr. Sakware is the National Health Insurance Coordinator at the Ministry of Health and a member of the Health Insurance Tribunal. He worked with Tanzania Insurance and Regulatory Authority, the TIRA, from 2017 to 2019 as a Commissioner of Insurance and Chief Executive Officer. Prior to joining TIRA as Commissioner of Insurance, he has held a number of management positions. He was Dean of Faculty of Insurance and Social Protection at IFM and Secretary to Insurance and Pension Technical Team at Bank of Tanzania that advises the Bank of Tanzania on insurance and social protection related issues. Dr. Sakware has extensive experience in leadership, research, and consultancies at various levels. Dr. Sakware is a senior lecturer and expert in the field of insurance and social protection. He has presented in various international conferences on developing insurance frameworks, compliance, and technical aspects. He is a founder and executive chairperson of the Africa College of Insurance and Social Protection, ACISP. I now invite Dr. Sakware to share the success stories that we have known in Tanzania. Dr. Sakware, please. Thank you.
Mr. Devesh, I think Dr. Sakware has lost his connection with us. It seems he has a connection problem. So can we move to next, and will he be able to join us?
Sure. Then in which case, can I request Mr. Erastus to join us, please? So you are here. So Mr. Erastus is an agronomist with over 13 years of agriculture, insurance, and reinsurance experience. He has worked at Syngenta East Africa and Syngenta Foundation for Sustainable Agriculture, coordinating smallholder farmers' development projects. While working with the Syngenta Foundation, he helped in the pioneer implementation of the first index-based crop insurance program in the region, which later transformed to the Kilimo Salama initiative. He later joined the Jubilee Insurance Company of Kenya, where he helped spearhead the formation of the Agriculture Insurance Unit and later APA Insurance in Kenya as head of the agriculture section. He is currently in charge of agriculture insurance underwriting at Africa Re, with the role of development and implementation of agriculture business in Africa for the last 4 years. As an insurance underwriter, he led the technical underwriters team that formed the Kenya National Agriculture and Risk Management Program and the Kenya Livestock Insurance Program under a pool arrangement program in the Kenyan market. Mr. Erastus, we welcome you today to this seminar and would love to hear the stories that you have to tell.
Thank you so much, Mr. Devesh, and for that introduction. I'm going to mainly discuss about the challenges and opportunities for insurers and reinsurers with based on the experience that we have on the African continent. Mine is not going to be a PowerPoint presentation. I shall discuss the same, then we can discuss any other areas that are not very clear at the end of the session. So basically, if you look at agriculture insurance in Africa, we are at around, most countries that are already implementing agriculture insurance are some or less than 15 years in implementation from the start, from when they started implementing the programs. And if you look at the whole African ecosystem, most countries are yet to launch agriculture insurance as a form of protection for the sector, and efforts are still insignificant with no tangible results as yet. In some of the markets, there are still no figures that can be seen in terms of agriculture insurance. So the assumption is that there's nothing that's happening as at the moment. If you look at the premium volumes, I would say that we are at around $260 million in the continent, with most of it coming from the southern part of Africa, especially South Africa, which has around $150 million. Then the most Southern African countries and East African countries accounting for 80% of the premium currently being generated. So a lot needs to be done, especially on the northern western parts of Africa as yet. And some of the issues that are hampering or hamper the growth of agriculture insurance in the market are some highlights that I'm going to discuss. And then I'll also look at some of the markets, what is happening, and some of the lessons that probably we can be able to learn from these markets. So if I look at the challenges that we have, these challenges will be key in most of the developing countries. One of the biggest key challenges is data. And when we talk about data, we're looking at data availability. How is data available? In areas of operation, we find that there has been no clear protocols as to collection of data and storage of data. And therefore, when you want to come with products, then you find yourself with the challenge of having the right kind of data that you can be able to use to price. But apart from availability of data, access to that data, how do you access it is a key issue. What's the cost of the data and quality of the data? And most of the products being implemented, if you look, for example, we have index insurance. To be able to design index insurance products, you need a lot of historical data. And if this data is not available or there are gaps in this data, you find that there are issues in terms of modeling. Either you are not able to model the products, or the quality of the products that are being modeled may not be as per the market requirements. So a lot of work needs to be done in terms of collection, availability, and access to data for the private sector to be able to develop products. Then the other one that I will have several areas to discuss is in terms of technical capacity. And in technical capacity, there's several areas that I will look at. The first one is proper risk analysis. The second one is pricing. The third one is market awareness and consumer education. And then services to the industry. So when you talk about proper risk analysis, agriculture insurance being a new venture in the market, we need technical expertise to be able to analyze the products properly. And that starts with proper understanding of the value chains to be covered. If you're talking about, for example, the maize value chain, you need to understand how the maize value chain is affected by the risks, how maize crop is affected by risk, and also in relation to where that particular crop is being planted. If you don't understand that, then there arises issues of product development quality. Then the next one is under proper risk analysis is understanding of the risks affecting the value chain, including the locations that these risks are covered. If you don't have these, then you cannot be proper. You cannot be able to design products or have the proper underwriting capacity to implement. The second point at a technical capacity that I'll talk about is the ability to do proper pricing. And pricing is a component of that I already mentioned. But also understanding and modeling of trends on the ground. The pricing also required experience actuarial analysis to be able to work with agronomists and other related professionals that will be required, working with agrometeorologists, data scientists, and so on. So this kind of expertise is usually required, and you find that in most instances, they are not available or the cost may be high. So most insurance companies will tend to rely on other partners to be able to offer this as services. And from the insurance company's point of view, that cost, the initial cost may be quite high, and that will limit in terms of being able to go to the market to be able to design products that can meet the client's needs, or to be able to address the opportunities as they come on the ground, because also how you address the opportunities, how you are able to capture and implement the opportunities that come on the ground will depend whether you have the right kind of capacity to model products as per those needs. Then the other one is how to balance between demand and supply. And in the markets where we've had demand for the products, you find that also demand dictates also the kind of pricing that they would need to be implemented. And the pricing mostly will start with what the market demands, and then you try to work out on models that can be able to be implemented. And that brings a challenge in terms of if you conform so much into what the market needs, rather than having the best kind of product that will pay out at the time that is needed, then you find that there's a challenge, especially if you reach instances where clients expect to be paid out and the product is not able to pay out as required. And from the client's perspective, you understand, of course, there's a lot of demand in terms of the resource that is available, and they will try to, insurance being a push product, it's usually more or less the last thing that will be considered. Then the next is market awareness and consumer education. So in market awareness and consumer education, one of the key challenges that faces the insurance industry is the cost of consumer awareness, which is quite high. Implementing agriculture insurance is different from conventional insurance. It requires going down to the rural areas, being able to communicate to the farming communities in ways that they can be able to understand. And that requires a lot of investment, understanding how the local markets work to be able to implement. And that's a new market or new areas that insurance companies are venturing into. And it requires a lot of capital. And even on the private sector side, there are also demands in terms of how much we can be able to invest, how long can we be able to invest, because resources are required. Both the investors require returns on the investments that are made. And you find that in agriculture insurance, growth is very limited. And there are few success stories that we can talk about. But in most markets, its growth is on a slow pace. And that impacts more or less the kind of investments that can be made by the private sector in the market. Then the other one is knowledge of how to communicate effectively, the technical details of the product to communities in ways that they can be able to understand. Because if clients cannot understand the products that we are taking to the market, it becomes difficult for them to buy. And in one of the experiences that I've had personally in implementing one of the products that we have, index-based insurance, that mainly uses satellite to measure losses on the ground. And we were down in the communities trying to explain how the product works. And one of the questions was, who is this who drives the satellite? And in case that community is paid, you'll find themselves asking, why is that person favoring this other community? And it brings the question like, how do you explain, how do you make the communities understand the product and be able to gain the eventual confidence that will lead to sustainability of the programs that are being implemented. And therefore, as part of maybe some of the key success that we have seen on the ground, going out of the norm and coming up with new ways of implementing products, such as using games that they can be able to relate with, using community stories that can bring the challenges they are facing in terms of risk and that are targeted to be addressed, that they can more or less be able to relate. Just trying to see what's happening in the community and being able to use that platform to be able to distribute the products. Then involvement of community leaders and making them understand, given that, you know, trust is built from ground up in most of these communities. And once the leadership on the ground are able to understand whatever the products are being implemented, then you find the communities coming in and starting to buy. Then the other challenge that we find also is access to related services that are required to be able to implement successful programs. So we're talking about services such as loss adjusters with the products that are being modeled. If you're talking about area yield index insurance, you find that we have various national schemes that I'm going to highlight later. And some of them are 2 or 3 years old, some are just starting to implement. And you find that some of these services are not available in those markets. So being able to implement, if you're implementing an agriculture insurance program, then the key question would be, are you able to do the loss adjustment and pay the farmers when they're required to be paid? If you're not able to do that, then it means that there's a problem and you need to sort this first before you implement. And therefore that hampers more or less implementation and growth of the products in the market. So we're talking about loss adjustment. Do the insurance companies have the right tools, the right skills to be able to implement those ones? Then when index insurance, where now we are using like satellite technology or weather stations or NDVI data to be able to measure losses on the ground, a new kind of set skill comes in. We need calculation agents to be able again to determine whether there are losses on the ground. And that service is not really readily available, or those that are available charge a price, and that always also will hamper the growth. Then the other one that the last challenge, more or less key challenge that I would highlight is having a conducive policy environment that would help in the growth of agriculture insurance in the markets that we are in. And when we're talking about policy, we start with issues to do with regulation. And if you're operating in a new market, bringing in new products, new models of implementing, then also the regulator needs to understand one, allow for innovation to take place. They also need to understand the products to be able to go through the regulation processes that are required. They need to understand from both parties what are the requirements and the minimum requirements that need to be met. And in some markets, price is also dictated by the kind of tax regulations that you find on the ground. If there is high taxes, even for agri insurance, you find the cost going high and the products becoming expensive for the farmers. Then market capacity enhancement. I would look at market capacity as a role that the government can really play big. And in most markets where we see real growth, we find that the government has really come in also to support in terms of market development and that cost. The other thing is research and development. There's inadequate research and development in the ground, and this can help in terms of being able to come up with new products and new ways of implementing the products. Then access to finance. What are the regulations in terms of access to finance? There are either no regulations that will help in terms of uptake of insurance and so on. Then in an analysis of most markets that have been able to grow well, you find that most governments have come in and supported the sector in terms of bringing in subsidies to help in uptake of insurance. And in most of the markets that we are in, this is still something that has not been implemented. And some of the key success stories that we have are also related to how the particular governments have come in to support in terms of providing subsidy on the ground. And the other question would be maybe, of course, are they sustainable, and what are the strategies that will make such programs sustainable? Because if they are not sustainable, governments come in and go out and needs change. And if not properly implemented, documented, and structured into the policies of the governments, then you may find that they may not be long run, or the strategies may not be sustainable. Then the other one is socioeconomic and political environment on the ground that we experience on some of the markets, being able to trade in the international market. We've had instances where, for example, limitations of the dollar in the market makes it difficult for even premium remittance to international restaurants. So even risk transfer becomes a problem on the ground. And that's a key challenge that will also come in relation to policy. Then we're talking about even security stability in some of the markets. And I'm talking about one of the programs that we have, for example, in Nigeria, where there were conflicts, community conflicts, and in one of the products where people have to go on the ground and do crop loss adjustment, we were not able to do that because of the conflict. So in such instances, which kind of products can you be able to bring on the ground, and how do you address the processes that are required for you to be able to implement successful programs? So that becomes, again, another key challenge. Then also the literacy levels of the communities that are being targeted. That's also something that is telling me. In one of the key products that we have, some of the communities, the education level may not be as high, and therefore, even in delivery of the products, they need to be as simple as possible. So those are some of the key challenges that I have experienced in the market. But on the other side, what are the opportunities, and in some of these challenges, how can they be addressed, and what are we seeing happening on the ground that can be able to be emulated or researched further on how it can be grown. And the key one that I've seen is the key growth areas have come through public-private partnerships with governments or government bodies that are operating on the ground and targeting the farming sector. I will highlight just some and how they operate, because each have got their own unique ways of operation. The first one is in Zambia, where we have the Farmer Input Support Program. And in this program, the government insures approximately 1 million farmers. And the way they've been able to reach this target is through a different program that the government was implementing on the ground, which is support of farmers through input subsidies. So in the government program, each season, the government gives subsidized inputs to farmers, so fertilizer, seed. And for farmers to be able to access these, they use e-voucher system. So they do have like, I would call it like a debit card that will go to a stockist and use that to access inputs. And given that the success of the input subsidy program, the government decided to bring in insurance as a layer for the farmers to be protected. And in this case, because the government had already really heavily invested in subsidizing the inputs, all the farmers need to do is to pay for the insurance, and then that unlocks access to the subsidy programs. And we've seen that being implemented and being able to reach one of the key successes that we can be able to look at. The second one is in Nigeria, we have the Anchor Borrowers Program. And the Anchor Borrowers Program is a program that is being implemented through the Central Bank of Nigeria. And the Central Bank works with various financial institutions that target lending to the farming communities. And therefore they give them some sort of subsidy so that they are able to give affordable finance to the farmers. And in relation to that, given that there's a huge investment from the government in terms of providing finance to the farming communities, then these also insurance has to be layered on top of this. So all the finance that is going through in the market is covered through insurance.
Mr. Erastus, I'm sorry I'm interrupting you here, but I think your voice is fading as you speak. If you could get a bit closer to the mic, that will be of great help. Thank you, Mr. Erastus.
All right, sorry for that. I'll also try to be louder. So the other one is in Kenya, where we have the Kenya Agriculture Insurance Program and Kenya Livestock Insurance Program. Here, the government provides 100% subsidy to very vulnerable communities who keep livestock, and 50% premium subsidy to crop insurance, to crop farmers in targeted regions. And for the Kenyan case, the model of implementation is through partnership with, we have aggregators who work in the market. So they would more or less come in to provide insurance for their farmers, and the government would come in and pay 50%, and the aggregator would find ways, either the farmers paying directly or the aggregator paying on behalf of the farmers. And in case of a loss, then they get paid. But there's also a voluntary component for the government scheme, where the insurance companies more or less go on the ground and are able to implement. Then we have Rwanda, where the government pays 40% premium on given value chains. We have maize and livestock value chains. And in Rwanda, the key target that the government is looking at is they are working especially with SACCOs on the ground, because SACCOs do have access to farmers, and most farmers and the value chains that are in the market are more or less organized into some sets or some forms of cooperatives. And using the cooperatives, the cooperatives are able to distribute the products on behalf of the insurance companies, and collect and pay premium. And at the end of the season, in case there's a claim, then payments are made also again through the cooperatives and to the beneficiary farmers that are on the ground. In Uganda, the market decided to form a pool of insurance companies. So all insurance companies that wanted to implement agriculture insurance came together to form the Agro Consortium. And in partnership with the government, the Agro Consortium is able to more or less develop products, distribute products, and manage more or less the processes that are involved in terms of placing the products and just making sure that there's business growth in the market. The unique thing with this is that there's a relationship between the consortium, the regulator, who is very keen, engaged in the scheme, and the government pays a premium to an escrow account where the consortium, once they've been able to submit the bordereau to the regulator, they are able to directly access funds from the escrow account from the government. And that why I was saying that that's unique. One of the key challenges that we are faced in most of the markets that are having PPP is the ability to be able to access the premiums on time from the government. And in this case, like in Uganda, we find that it's one of the schemes that we are having that even premiums are being paid in a very timely manner. Then the other of areas that we've seen also bringing in growth is partnerships through input suppliers and agro-market players. So partnerships with financial institutions, input companies like seed and fertilizer companies. And then we have off-takers, you know, the big off-takers that take provide markets from the farmers, you know, like processors and the likes. Then the other areas, the other kind of partnerships that I've seen is partnerships with development and partner organizations working in the sector. And you find like organizations, for example, like the International Livestock Research Institute, which has a keen interest in the development of the livestock sector, being able to come in, do proper analysis and research of the markets, and being able to design products that can be taken up by the insurance companies. And that helps more or less in some of the key challenges that you find insurance companies facing, like having the capacity, you know, like the actuarial capacity, or having access to other related technology partners that will be required to be able to develop programs. So, like, for example, the Kenya Livestock Insurance Program really relied on research and activities that the International Livestock Research did in partnership with some private companies in the market. And that has been able to grow to several markets and is a going concern more or less in markets where we have extensive livestock systems, for example. We have organizations such as the World Food Program that directly works with farmers. You know, there's something like Working for Food program and so on that they do have. And through the interventions, because they work directly with the farmers, they are able also to bring in insurance, more or less, to be able to also provide another layer of protection that the farmers required. So we have a number of organizations in the market. And some of these organizations, even if they are not like directly in the marketing and even the development side, there are opportunities that we see that can come. But also that said, we do have also, because capital is a key concern, there are also those organizations, governments, and so on that can be able to provide soft capital even for the market that can be used. Then the last one that I will talk about is technology. And there are emerging technologies that can help in terms of, the first one is in terms of product development. We're seeing products, for example, such as soil moisture index coming in that were not available previously, which with time we believe that are going to be better than more or less the other kinds of satellite index insurance that have been in the market. Then we also talking about satellite use of satellite to be able to model and monitor products on the ground. And with time, we find that even the kind of quality that we can get from even satellite technology are becoming more refined, and that can be used even to more granular levels for the benefits of the communities. But then on the other side, we're talking about product management, how the opportunities that technology will bring in product management. And we have companies that are coming up with underwriting platforms, because being able to underwrite the products well is one of the key needs of the market. And having a technology platform that can be able to assist you to do that is very important. And then also pricing platforms. With pricing platforms, it becomes cheaper. It will become cheaper and faster to be able to model products. And the market may not really need to invest very heavily in terms of personnel if some of these platforms are already developed and are in place. So we do have some entities that are already coming in to provide pricing platforms that underwriters can be able to use. And
Mr. Erastus, can we conclude it now, please? I mean, we'll have a longer question and answer sessions. Then I'm sure people will have loads of questions to you.
Yeah, so, thank you so much. So yeah, maybe the last one is the use of drone technology. And the only thing that will limit this is the kind of regulation that will be needed to be able to implement this. But it's one of the areas that we are exploring to see if we can be able to do proper analysis and management of products through that technology. Thank you so much, and sorry for taking extra time.
Thank you so much, Mr. Erastus, for your very informative talk to everyone. Indeed, I think drone has become the flavor of the season now. And as you very correctly said, simple products is what is going to drive sustainability, and of course, the government support that you would require. So thank you again, Mr. Erastus. I'm sure the panel will have loads of questions later on. We fortunately have Dr. Bhagyo Sakware back. His connection was lost. I introduce Dr. Sakware again. Dr. Sakware is the National Health Insurance Coordinator at the Ministry of Health and a member of the Health Insurance Tribunal. He worked with the Tanzanian Insurance Regulatory Authority from 2017 to 2019 as Commissioner of Insurance and Chief Executive Officer. Prior to joining TIRA as a Commissioner of Insurance, he has held a number of management positions. He was Dean of Faculty of Insurance and Social Protection at IFM and Secretary to Insurance and Pension Technical Team at Bank of Tanzania that advises the Bank of Tanzania on insurance and social protection related issues. Dr. Sakware has extensive experience in leadership, research, and consultancies at various levels. Dr. Sakware is a senior lecturer and an expert in the field of insurance and social protection. He has presented in various international conferences on developing insurance frameworks, compliance, and technical aspects. Dr. Sakware is the founder and executive chairperson of the Africa College of Insurance and Social Protection. Dr. Sakware, we would love to hear your success stories from Tanzania. And welcome, sir.
Thank you very much, Mr. Devish, for your good introduction. Sorry for delay due to some connectivity issues, and
so
I'm
we
now
are unable to see you still. Is your video on, sir?
Okay, I can make it work for you. Is it okay now? Do you see me?
I can't. Can everyone see Dr. Sakware? Hiba ma'am, can you see him? I'm unable to see you, sir.
Are you able? No, not yet. No. So let me continue. Then I see if things will work better in future.
All right, sir.
So let me share my slides. You can see my slides now.
Yes, I can.
So I want to give you the current state of agricultural insurance in this part of the world, and a few experience on my country, Tanzania, and share with you some good stories, but also some challenges as far as agricultural insurance is concerned. Just to give you a nutshell of what agricultural insurance entails, some few features, which includes, you see, we see that there is difficulties in achieving adequate diversification when it comes to agricultural risks. We also see the issues related to asymmetries of information in underwriting, which leads to possibility of adverse selection and moral hazards. We also see the geographical spreading of agricultural products and complexity of the process of production, which calls for skilled and expert underwritings. And therefore, given these features, most of the insurance companies operating in our market have dedicated agribusiness units, or normally they outsource the underwriting agencies to do the agricultural product development. Now, I will talk about the characteristics of farming and the farmers in Tanzania. And this is based on a research, a very current research. To 2018, we did, the country did a survey through Financial Sector Deepening Trust. And these are the characteristics which is important that we share with you all. We will see the nature of household crops production, the nature of household livestock keeping, and risk financing and risk management structures for farmers. Or I'm saying risk-facing farmers and risk management structures in place. So, what is the nature of our household crop production? We ask the questions of whether the household grow products for consumption or for sale. And we found that in Tanzania, about 78% of the household crop production are produced for consumption. And they produce more than one type of product. 78%, they produce more than one type of product for consumption. It can be maize, it can be beans, and others. 21% of the household produce one type of crop for consumption. And these, we are talking of the number of about 4,726 households which we are interviewed in this survey. And then we ask the questions about number of crops grown for sale. And the household the response was that more than one, the household produce more than one product for sale, and these constitute about 49%. And 32% produce only one product for sale. And this survey was very important for us, just to see whether we can have health insurance for crops which were used for consumption only, or for crops which were used for selling. So this is the nature of the household crop production by the statistics of 2018. Another important characteristic is the nature of household keeping livestock. And we did ask if the household have any livestock. And the result was that about 52% number of households say they have livestock. And we wanted also to understand for how long they have been keeping livestock. And interestingly, the statistics indicates that the older people owns, they keep livestock, and their experience is more than 10 years. This is about 63% of the entire surveyed household. So we found that the young generation is not very much interested in keeping livestock in our country. And this has informed us something to do with livestock insurance, so to speak. These are the few categories of risk-facing farmers in the country. there's not much difference with the previous presentations. I've seen some screen. There is a human risks, which includes health, illness, issues related to school field, death, injury, and the likes. There are economic or financial risk, which relates to prices of goods, meaning crops and livestock, interest on loan, and lack of information. And there is a risk related to production, which includes diseases, pest diseases, climate and weather change, limited labor supply, insufficient machineries, and the quality of seeds and the likes. Assets, asset risk, which include fire, theft. And then we go further and found out what is the experience of particularly the rural household in terms of the shocks for the last 12 months. And we asked a very simple question, whether in the past 12 months, a household have experienced any shock or any events which causes loss in their farming or livestock keeping activities. And 92% of the rural households experienced some shocks. And we wanted to rank what is in the past 12 months, if they have experienced what is that type of risks. So in our sample, we got about 26 or 76 talking about medical emergencies, crop failure about 36, death of the family member about 30, death of family member 23%, housing repair or construction about 22%. As you can see in my PowerPoint presentation. So as you see, the main shock was medical emergencies or crop failure at half rate, which is about 36%. So we asked for agricultural related hazards. 79 of the hazards in the upstream agriculture are related to weather. So we asked about what poses the most significant risk to your agricultural activities. And the sample tells us weather-related events, about 71. Pests, about 12%. And the same, the list goes on. Input prices, market prices, health, and the like. And we also asked if your agricultural activity have been seriously affected by the following. We listed those risks. Weather-related also get about 79, pest diseases about 67, unexpected price fluctuation about 32. So we are talking about 3,000 small farmers whom were interviewed, whether they are facing these kind of risks or hazards in their farming activities. Now, given this, what are they using as risk management approaches? There are different levels, 2 levels: the household level, a farm household level, and community level. And in the household level, there is issues related to saving, diversification of crops. In the community level, there is a food crop sharing and common property resource management. and you know, rotating saving or credit saving activities. As a community, these are the things they undertake. There is also sale of asset at farm household level, or reallocation of labor, reduced consumption and the likes, or borrowing from the relatives. But at community level, there is a sale of asset as well, and transfer from mutual support network. Formal measures we have seen in our market is share and transfer, which insurance is among them. But at public, at community level, there is a pest disease management by the public, or especially government. And so what we have observed is that the borrowing is the most common coping method for emergencies. And normally they borrow from friends and family, sell crops, sell livestock on their possession, and using the community arrangement which I have just mentioned, especially saving in communities, credit saving communities. Normally, the use of borrowing is driven by medical emergencies in most cases. So, in terms of agricultural related risks, several coping strategies are used. And for example, in this slide, you can see the weather-related events in a blue, pest-related events in somehow red, and the last histogram there shows unexpected market price fluctuation. So you see, in for agricultural related risks, household would use a temporary job, about 15%. For weather-related event, they will use temporary job. And they will use temporary job for unexpected market price fluctuation, about 13% of the household. Taking of loan is not very popular. Borrowing is about, for pests and diseases, is leading. So selling of livestock for unexpected market price fluctuation is leading, about 23% as a coping strategy. Sale of asset for agricultural related risk is not very popular. Using savings is very popular for pests and diseases, popular also for weather-related events. And these are other special measures which are not part of the survey. And as you can see here, the farmers are very much willing to invest and cope on risk related to seeds, pests and diseases, equipment, crop rotation, fertilizer. And as you go down, securities are not very favorable in our market. So let me dwell a bit of the status of the agricultural insurance in Tanzania. We have about 44 million hectares of arable land, with only 33 of these in cultivation. And the agriculture insurance has a potential to insure about 67% of the population, which works in the agricultural value chain. In the supply side, we have 30 insurance companies in the market. Only 4 insurers have some form of agricultural insurance product, and the insurance covers only about 0.05 in terms of its premium underwritten. The potential here is that there is a large population, but although I can see in the future, there is a government intervention in terms of VAT exemption on agricultural insurance. This is the statistics I was talking about. The largest portfolio of gross written premium falls in the motor, which takes about 32%. But if you look at agriculture, it's about 0.1 in the total insurance premiums underwritten. Of course, this is the structure which has to be reversed, because if the population of 7% are working in the farming or value chain or agricultural value chain, so that has to reflect in the insurance part as well. That is the government aspiration. What are the challenges? The most common one relates to underwriting. There is a limited extension services, lack of data, proper data, as my previous speakers rightly said. Generally, there is underinvestment. A lot of investment are not done in this part. There is a distribution-related challenges, which reaching farmers is very costly and it requires some investment. But if you want a scale, then you have to reach as many farmers as possible, and to do so, you require it costs. There is a cost. Awareness in terms from the farmer's point of view about insurance. And then there is the issue related to value, the market price, post-harvest losses, and limited commercialization of the agricultural activities. As I mentioned, if most of them are producing for consumption, then it becomes not very viable commercially, if you like. So what are the lessons in the development of agriculture in Tanzania? One I can see is that you need to get a right mix of partners. I will propose that you have to have involve a research institution, involve the government, insurance, and agribusiness community. This combination will make a proper business proposition. So the getting a right mix of partners is something which is very important. This is a lesson for anyone who wants to engage in agricultural insurance. Another important lesson is the start small due to supply chain challenges. Then after successful story in a small scale, you can escalate the same to a large population. A third lesson is, I am of opinion that you do not need to reinvent the wheel. You do not need to start from the scratch. There is a lot of global experience from India, from Nigeria, go down to Kenya, South Africa, Zambia, you name it. You just need to, you don't need to start from the scratch, find the global experience and start from there. Awareness, farmers and community understanding should be, you have to have a very clear communication strategy because this is a very delicate market. If you go wrong, to clear the air, it will take time. So the clear communication strategy is paramount. These are the roles, possible roles of the public and private entities in any insurance, in agricultural insurance development. You need to have farmers union to facilitate partnership, prepare farmers for education materials and the likes. You need to have insurers in place on board to develop contracts with seed companies or any other partner. You need to have research institutions like Africa College of Insurance to design the index insurance product itself and provide intellectual and strategic leadership. And then you need to have seed companies and government on board for coordination, for data, for administration, and the like. Of course, going beyond even for subsidies for that case. This is a common strategy for the role of government. It's to collect data. In terms of data, collect, audit, and manage. An outreach linked to social safety, linked to credit, subsidized premiums, awareness building, financial support, so to speak, public sector insurance, promote co-insurance pools. This is a proper role of the government for proper development of agricultural insurance. So what are the government of Tanzania aspiration as far as agricultural insurance is concerned? The United Republic of Tanzania, through National Financial Inclusion Framework, has set an objective of 50% of the adult population to have at least one type of insurance. And as I said in my previous slide, if you want to have 50%, you have to include agricultural activities because 67% of the people are working in the agricultural value chain. So the target is that 10% of the gross written premium has to come from agricultural insurance. Currently, we are about 1%, as I've shown you in this slide. You can recall this slide. So here we have only 0.1. Our target is to have at least 10%. So to get that significant result, the government has exempted agricultural insurance from VAT since financial year 2021 to make it more affordable. So to achieve that, there is this initiative by the government, which is called the Agricultural Sector Development Program, Phase 2, ACDP Phase 2, which is called for 13 trillion investment in agricultural sector. Now, insurance sector has to investigate opportunities in agricultural insurance from large investment requirement, and the Tanzania Agricultural Bank has some facility to undertake those. Government is also putting partners on board, like partners like FSDT, Financial Sector Deepening Trust, are putting platforms with collaboration with the agricultural sector. The platform facilitate knowledge, value chain investment opportunities over long-term periods. And then there's this tax exemption, which I've mentioned, to agricultural insurance, is part and parcel of the Agricultural Sector Development Program Phase 2. There is Tanzania Mercantile Exchange as a potential game changer. The exchange offers a platform for sale of commodity. It will enable to facilitate hedging instrument to manage market risks and give more confidence for investment and insurance. Currently, there is a national health insurance launching of health insurance solution to agricultural market cooperative society, AMCOS. The solution can be potentially reach millions of rural households and help to increase awareness of insurance. As we've mentioned, medical insurance is part and parcel. It's one of the major risks facing the farmers. Through medical insurance, they can go beyond agricultural insurance. in a nutshell, that is what I can share for today. Thank you very much. I am ready to receive your questions.
Thank you. Thank you, Dr. Chaudhary. That was really very informative. In fact, to take it from 0.1% to 10% is a tough task, but given that 75% of your population is in agriculture, it is very much achievable. So thank you again, Dr. Chaudhary, for your talk.
Thank you.
I'm sure we will have a lot of questions once the next speaker is also over. So we have now our last but not the least, the speaker from Swissary, Mr. Mahesh Patankar. Mr. Mahesh Patankar heads the local agriculture underwriting team at the India branch of Swissary. Based in Bombay, he is responsible for managing the Indian agriculture insurance business. Prior to this, Mr. Mangesh served as an underwriter in the agriculture team in Singapore, where he worked on structuring, pricing, and underwriting crop and livestock reinsurance products for markets in South Asia and the Philippines. Before joining Swissary in 2011, he spent a year as the fellow of ILO's Microinsurance Innovation Facility, where he assisted the Philippine Crop Insurance Corporation to develop its first localized weather index product for Mindanao under the United Nations Climate Change Adaptation Project. Among other assignments, he has also worked as the principal investigator for ILO-funded research project dealing with the first normalized difference vegetation index and rainfall composite insurance product in India. He is a postgraduate from the Institute of Rural Management, Anand, and holds a graduation degree in computer engineering. He is also an associate of the Chartered Insurance Institute of UK and a fellow of the Insurance Institute of India. Mr. Patankar, we invite you to address us, please. Thank you. Mr. Patankar, we are unable to hear you right now.
Hello, sir. Can you hear me now?
We can, Mr. Patankar. Please go ahead. And we can see your presentation on the screen as well.
Can you hear me now? Okay, cool.
Yes, sir. Yes, sir, we can.
Delay. First of all, thanks for this opportunity to present over here in this prestigious forum. Also, thanks to the other speakers for sharing their first-hand experience from various corners of Asia. Topic today for deliberation is role of reinsurers in the context of risk transfer strategies, and happy to share some of the views on this from the lens of agriculture reinsurance. I will not deliberate much on the alternate risk transfer mechanisms, which are also getting popular these days in the in this agriculture reinsurance space, but will rather restrict to traditional reinsurance industry offerings, and would request Mr. Devesh as well to share his views at the end if time permits. Thanks. Swissary has been talking about the climate change aspect for a very long time. Perhaps I'll start with a sort of cliche side on what climate change can do. First of all, of course, the warmer climate warmer average temperatures, rising sea levels, melting of the ice caps as well, longer and more frequent heat waves, perhaps erratic rainfall patterns as well, increasing rains, of course, increasing frequency of the unseasonal rains, and there could be many more other effects as well, perhaps more hurricanes. And the scenarios will only worsen if the global warming expedites by a few more degrees. And if you see the right-hand side diagrams, they would give you a few of those scenarios. Now, to sort of mention about the gap between the insured and uninsured sort of perils. If you see here, the gap is increasing a lot, and perhaps a lot to do here with the way in which the exposures in the agriculture are increasing. The urbanization is also increasing here. Of course, not much to do with the agriculture risks, but that is also a bit of an issue. We also see the impact of various other perils, the primary perils as well as the secondary perils in increasing year on year, and that also increases the so-called protection gap. And if you see, if we simply focus a bit on the Asian and African scenarios, we clearly see that the protection gap is quite huge in these two continents, and cannot ignore that given the huge population contribution in these two continents. In most of these countries here, the post-event financing is more popular. I think we have seen this from the earlier presentation from Dr. Bagayo, where he talked about the post-financing mechanisms, post-event financing mechanisms. Many of the smaller African and Asian nations continue to rely on tax increase, donor assistance, raising of the debts, loans, and ad hoc budget allocations. Instead, what is really needed in the industry is perhaps more planning around the reserve funds, the contingent financing, last but not the least, the risk transfer, which covers both insurance as well as reinsurance industries. And institutions like World Bank have clearly identified availability of insurance as the best mitigation approach against real and fiscal consequences of disasters. India's national disaster management policy also mentions that insurance seems more prudent risk management approach to implement financial tools for disaster risk financing. Naturally, if the government start going more towards ex-ante mechanisms like insurance, the insurance will need more and more reinsurance. When it comes to agriculture insurance, it appears to be a very challenging line of business because of various reasons. First of all, of course, high loss activity, the low margins due to the affordability constraints, particularly in Asia and Africa. Second would be political influence. Third would be, of course, the low penetration and limited diversification because of that. Constraint risk evaluation issues, like how do you select, how do you price the risks? And of course, there could be other operational challenges like claim assessment as well. Considering all these challenges, the relatively new agri-insurance industry in the Africa and Asia markets has remained so far underpenetrated. There are a few exceptions like South Africa, China, India, South Korea, and Thailand. But the credit here mainly goes to the generous subsidies which are provided by the governments, which you can clearly see from the diagram here. Mere subsidies are not enough, of course, because many of these programs have premium subsidies, not claim subsidies. That means there is not much assistance given by the governments to insurers if they give out more claims than the premiums that they are, which means the insurers have to take a considerable risk on their books and ensure that they sustain despite tough rate competition. This also means that the insurers need to have enough capital and diversification, otherwise they can become insolvent easily. And this is not an easy job, especially when we see an increasing number of climate linked disasters shaping up across the world. And here we have listed a few big agri insurance markets like India, South Korea, South Africa, China, Thailand. These have faced floods, droughts as well, and of course, in the past few years, few of these countries also face cyclones. Out of these losses, perhaps the most notable are 2012 hail losses of South Africa, 2014 and 2015 back-to-back droughts in India, as you see, 2019 African swine flu wave in China, which affected the livestock industry. Not much to do with climate, but definitely worth to mention here. Typhoon Bolawin in South Korea in 2012, and then in 2011 as well as 2019, a lot of floods in Thailand, which seem to have repeated again in 2021. So how does the insurance industry in these countries sustain in such volatile markets? And there comes the role of reinsurance industry. Of course, reinsurers provide capital support to the balance sheets of insurers. They help them achieving their solvency goals, also protect from the peak natural events, and they increase their financial capacity and help the growth. And that's very important. Growth usually comes with better diversification. So this is a win-win situation for insurers as well as reinsurers. Classic example is, of course, the 2016 experience from the Indian crop insurance industry. Suddenly, the market grew in size as most of the states in India adopted the new Prime Minister's crop insurance scheme, which helped diversification, but it also increased the exposures. And the local insurance industry would not have made it on its own. Most of the global reinsurers like us, as well as the national reinsurer GIC, which is represented by Mr. Srivastava here, increase the capacity and help the industry. Apart from this, this core job of insuring the insurers, the reinsurance industry can also provide other services. Reinsurers like us share the knowledge and expertise to the clients, help them with the new research and insights around risks, help them on actuarial front, on data analytics, create new products end-to-end, provide better platforms for monitoring exposures, and in general try to provide a long-term growth through the partnership. As far as Swiss Re specific agri portfolio is concerned, we can clearly see that reinsurance from Asia and Africa has definitely increased in absolute terms, and there are various reasons. Crop insurance market penetration is increasing, so there is more insurance, and there is obviously more need to reinsure. Second is, of course, new markets have been going for proportional deals, unlike the matured markets in other continents who seem to have much larger emphasis on non-proportional deals. These are two different fundamental ways in which the reinsurance deals happen across the world, and you may refer to the right-hand side of the slide to learn more about these structures. And big markets like China, India continue to have lots of quota shares, although the approach differs a lot. For example, China has now a domestic dedicated agri reinsurer, whereas the Indian market is a fairly open market so far, and relies a lot on the commercial reinsurers like us. Most important aspect here is now there is more insistence on the premium subsidized products rather than the claim subsidy or claim subsidized products, as I said earlier. Prominent examples here would be India, which has shifted from National Agriculture Insurance Scheme, which used to be there, ran for about 15 years, 16 years, which had no actuarial premiums for most of the crops, and claims were being taken by the government. If they were more than the premium incomes, then in that case, the government used to sort of step in and give the claim subsidies. Now we have shifted towards this Prime Minister's crop insurance scheme, which has actuarial premiums and in a way no claim subsidies. So a lot of reliance on the reinsurance industry here. A few other examples to be noted here on the slide where Swiss Re has been closely involved. Not every example, of course, relates to agriculture, but most of these are relevant to nat cat risks. This can give a glimpse of how diverse the demands of the markets could be, and from volatility perspective, how much more is there for us to insure or reinsure. Before I conclude the slides, I would like to just caution here that the reinsurers are also getting affected by the climate change. Maybe a very clear remark from the S&P here, which can help to understand the quantification. Most recently, S&P had observed that despite best efforts by the reinsurance industry to understand climate change impacts, the real risk it's still underestimated by 33% to about 50%. And if you see the left-hand side of the graph, it depicts how the climate perils continue contributing much more than other types of perils like man-made disasters. And the right-hand side graph indicates how the rates online for CAT programs have changed vis-a-vis how much more they should change, as indicated by the lower and upper bounds by those two straight lines. Specific to agriculture, we feel that the market costing inefficiencies coupled with very limited market hardening results in many country-specific insurance programs becoming economically unattractive, and that's a big red signal in my opinion, and that's something which we definitely need to deliberate on in the future as industry participants. To summarize, increasing population and changing food habits have put agriculture risks at the center stage, of course. Despite technological innovations, farming is becoming increasingly challenging, mainly due to increased natural calamities likely linked with climate change, and a few other factors as well. Due to the heightened awareness among the governments in Asia and Africa, we see that the contribution to the global agriculture premiums from these continents has increased in the last 10 years. This has also heightened the significance of the role of the reinsurers in these regions as they help in bringing more stability to the operations of insurers having limited geographical diversification. However, even for reinsurance companies, driving the business sustainably remains a challenge due to these increased weather events. Thanks again for the opportunity, FAIR team. Mr. Devesh, over to you. Thank you.
Thank you, Mr. Patankar. That was really very informative, and truly, I mean, India has presented a lot of opportunities, and the market itself has blossomed a great deal after the PM FBY came into being. So that was a very good presentation. Thanks again, Mr. Patankar. We now have a few questions from our participants. I think a couple of them were raised when we had just started our the seminar. So the first one, if I can ask Dr. Chaudhary, if you can answer this one, that it said that how far are the MENA region farmers aware of agriculture insurance? What is the number of Egyptian farmers who use insurance? What are the products and politics of agriculture insurance? This was the first question asked. Would you be able to throw some light on it, Dr. Chaudhary? I'm not very sure if Dr. Chaudhary is still with us, or because his connection was a bit erratic that time.
Well, hello.
Yes, sir. Yes, Doctor, sir. Please.
Yes, I was just saying that as far as the MENA region, I will not have some statistics as to how is it the knowledge of agriculture insurance within the farmers, but I can talk generally of my country, which is Tanzania. As far as insurance awareness is concerned, insurance awareness has been a challenge, a common challenge for the African continent, and this can be translated in the form of uptake. For example, in my country, it is about only 14.7% of the population which has at least one type of the insurance product. And this indicates that the uptake is low, and the uptake is the function of the awareness. Of course, it can be the function of supply side, but in most, and by and large, it is a function of awareness. So this can also be the same as far as MENA region is concerned. It is our duty, maybe it's a duty of all partners, being it a government, insurers, and farmers, and the higher learning institutions, so to speak, to find out a proper way to make an insurance a subject to farmers as a risk measurement option to farmers. So I think we have a lot to undertake. Awareness is still a problem around African continent. Thank you.
Thank you, Dr. Chaudhary. The next question that we had, I will have to request my co-moderator, Mr. Ala, to step in here. Sir, the question was, is crop insurance available in Egypt? Mr. Ala, sir?
Sorry, Divish, can you say this again?
Yes, sir. So the question that we had earlier was, is crop insurance available in Egypt?
Yeah, we do have actually created a new committee at the Insurance Federation of Egypt. This committee started working recently. This is only to develop the agriculture insurance in Egypt. We do not have a lot of requirements right now, but we are trying to also go to the market and tell them that we have a product. The product is being now at the regulator to be agreed by the regulator, and then it will be available for all the insurance market. They can market it. Having said that, there are two things that we are working on. The first thing is the crop insurance, and this is what most of the agriculture sector will need. This is what we are trying to develop a product, as I said. The other thing is the livestock. We do have a livestock policies in Egypt. This is up and running, and we have a big market for the livestock. So if you can consider this sector to be divided into two main sectors, the first one is the agricultural crop. We are, as I said, we do have the product but it's been now at the regulator to be agreed. And we do have the other thing is the livestock. Having said that, also the some insurance companies have been able to get some products from the reinsurance market, and they started slowly but surely to go to the market, try to market the crop insurance. But we haven't seen a lot of policies, to be honest, so far.
Interesting. Thank you, Mr. Ala. During the course of this discourse, there were a lot of questions that also came to everyone's mind. One, of course, was what Mr. Erastus, you were speaking about the technological advances. And you also spoke about drones. So any thoughts on that? How will it pan out in the next 4 to 5 years? How will the face of agriculture insurance largely change?
All right, thank you so much for that. I believe in the next 5 years, it's going to still be a going concern, as it's becoming a key discussion issue among several countries that several African countries, I think even outside. And currently we have, like countries like Rwanda, which has really developed some policies in regards to the use of drone technology. So I believe that with time, it will be easier to implement some of the schemes using that technology. In some countries, like for example, Kenya, the discussions are ongoing, though there's no clear policy in terms of how they could be used. And how I foresee these assisting, especially in agriculture insurance, most products are either being implemented in large scale, or we have government programs being implemented on the ground, and they require mostly physical visits to be able to do the assessments. And in physical visits, there are areas that you may not be able to see in terms of where exactly the risks are taking place and so on. And if you have the use of drone technology, you can easily visualize locations, you can easily see where losses are occurring. So even when deploying resources on the ground, you can have a targeted approach, which will be more cheaper and faster in the process, increasing the efficiencies that are needed in the market. So, and also in terms of what I've seen in terms of being able to foresee the kind of inputs that are needed on the farm, because when you have that overall vision, you can even talk about more detailed precision farming, where when even farming for each location in the farm, you are able to implement, put inputs in the right quantities where they are needed. And that more or less increases productivity and reduces the risk that you will be exposed to in the farming venture. So the only key thing that I see is on the regulation bit, if properly regulated, then it will be able to open up more opportunities for us in the market.
Thank you, Mr. Erastus. That was truly well said. If I may request Ms. Chaudhary now. Ma'am, you spoke about doing quite a bit with the government. And you are in an area that is very disaster prone.
Yes.
Now, given that backdrop, how important do you think is government intervention for sustaining this agri scheme in the country?
Well, I think it's very, very important. And you know that it's been a few years that we have been working alone and without any government support. We took our own initiatives and used our CSR funds, invested there. And, so it was like quite a bit, it took a long time for getting their attention. And without government support, I think this would be very, very this cannot sustain. Like you have seen in India and China, that the government support subsidies are there. And what we have mentioned it, also, instead of getting other funds. I mean, there are other ministries like disaster management, their agriculture ministry, finance ministry. Like finance ministry has come up with their funding, and then we gave us a project where where we're doing flood insurance for the Haur areas. So that is how, like, this pilot project, the success stories will actually create more, I would say, confidence about agriculture insurance, and also the confidence and trust of the farmers. So without government support, without subsidy, we cannot roll out heavily in Bangladesh. As you've seen that we have in few years time have reached out to couple of 100,000. I mean, it seems that it's very low in number, but believe me, it was really, really difficult to get into this number. But last 2 years, I would say, it has created an opportunity for us to actually, reach out to the farmers through the partnership. I mean, partnership, multi-stakeholder approach, the partnership, the distributor channel, a true distributor channel. It was like really, really successful for us. So I'm quite hopeful, because IDRA has now, taken this initiative, and if we reach out to the microfinance institution, and their guidelines has to be amended, that they can provide the insurance policy, but through an insurance service provider. Because of the credit risk, we can provide the credit assessment tools. Like the way we are working now with the banks. Banks have now, come forward. We are working with few banks right now. So I think if bank assurance model is now almost at the end, and it's going to come out pretty soon. If it does, and then I think it will be really helpful if telcos, banks, insurance companies, and then the startups, the IT startups, the tech startups companies can work together like we are working now. So this will definitely create a huge jump in the agriculture insurance. So I think interministerial combined approach is very much needed. So yeah. Thank you.
Absolutely, ma'am. I think all the panelists would absolutely agree with that viewpoint, that all these various arms have to come together. So thank you for that. If I may ask you, Mr. Patankar, I mean, you are from Swiss Re, which is, of course, the pioneer in most of the reinsurance products that we do. And also the fact that one of the basic tenets of a reinsurer is spread. Now, when you operate in India, which has over a dozen agroclimatic zones, how much of a comfort is that for you as an underwriter in Swiss Re to give out your quota shares?
Yeah, great question. I think Indian case becomes a bit specific in nature, given that it works in a bit of a reverse fashion, where the exposure certainty comes in only after the tenders. And usually when you negotiate on the reinsurance terms, usually you would not have that tender coming in soon. From that angle, I think exposure uncertainty remains a big challenge. The only way perhaps is to trust a few good insurance companies and distribute the capacity across them. So that is one approach. But I must say that this PMMBY has done a great job in persuading the states to subscribe to a common insurance program, which was perhaps missing before 2016. There was an era between 2010 to 2015 where you had three different schemes: MNAIS, NAIS, and RWBCIS, or rather WBCIS. And three different schemes working on three different types of indices. It simply didn't make sense. So from that angle, kudos to the Indian government that they were able to unify this to a large extent. And from that angle, part of the diversification issue has been resolved. But as I said, it remains a tough market from exposure uncertainty perspective. Thanks.
Absolutely in agreement, sir. Absolutely. India remains a difficult market despite its diversification, because the demands are quite a few. and the government. But yes, I do also agree with you that the government has really done a miracle in getting the entire scheme on board, and then keeping pace with it, changing it depending on the feedback that we are getting from the various states, and moving ahead with it. So
And I think this 3-year tender that they introduced a year back, I think that also carries some weight, given that that also adds to some less uncertainty on the exposure. So I think that sort of amendment is also not seen too many times among other governments. They have that courage to say that let's fix this. Yeah, thanks.
very true, very true, Mr. Patankar. The floor is now open for all the attendees. If you have any questions, please post them. We will be happy to pose them to the panelists. I guess there are not many questions or not any questions coming our way right now. Mr. Ala, may I request you to come in here, please?
Yes, dear. Are we done? I think we don't have any question, I believe. Okay, so I think with this we come to the end to our session, and I'd like to thank all the participants for their time, and also I'd like to thank our speakers and our moderator for the valuable time and all the insights. I believe that we all enjoyed this very interesting session, and hopefully we see you again very soon. And before we end, we will have next month the third webinar session for the fair. It will be on risk management, and of course all the links will be sent to all of you. Thank you for joining, and thanks once again to our sponsor for today, Meliri Reinsurance Company from Turkey, and thanks to IT Fusion, our IT support. Thank you very much all, and looking forward to seeing you again.
Thank you very much.
Thank you.
Bye-bye. Thank you.
Bye-bye.
Thank you, everyone.
Recording stopped.